Good morning friends, today it's 28th of May 2025 and the technical outlook for Nifty and Bank Nifty for intraday and short-term time frame is as follows. After a sharp up move of April series from the lows of 21,860 to the highs of 24,567, May month has already been a consolidation phase, a month within our range, and we have seen that since last a few trading sessions the index is hovering within a tight range of 24,500 and 25,200 mark with a range to positive outlook. As for the price study, we still holds range to up outlook unless and until the index slips down below 24,400 and lower levels. But at the same time, on the higher end, 25,200 remains very important on a short-term time frame basis. The index need to sustain above this level in order to witness fresh buying come short covering, which can take the index towards the highs of 25,800 odd levels. Till the time it is trading below 25,200 mark, the bias remains upside capped and one need to be hedged with the leverage long positions. And further, unless and until it slips down below 24,400 mark, the outlook remains hedged long. Yesterday, the index witnessed a volatility within a broad range of 24,740 and 25,100 mark, and it ended the session at 24,862 in red, down minus 0.69% at 24,862 levels. For the day today, index can again be within a range of 24,600 and 25,150 odd levels with upside capped unless and until it managed to sustain above 25,150 to 25,200 levels. Hedged long should be looked into on dips. Dips towards 24,600 and 650 odd levels can be looked for buying, maintaining a stop below 24,500 mark, while pullback towards 25,000 and higher can be looked for contra trading short bets, keeping strict stop loss over and above 25,150 odd levels. Bank Nifty too witnessed high volatility yesterday for almost 900 odd points from the lows of 55,069 to the highs of 55,940 before ending the session at 55,472. In red, down minus 0.39% at 55,472 levels. There we can see that the index is facing a stiff resistance at around 56,000 levels since 22nd of April 2025 when it made the high of 55,900 mark. Almost over a month, index is facing a resistance at around 56,000 levels. Bank Nifty 54,000, 53,500 remains important support zone, trading above which the downside is capped. And on the higher note, as mentioned earlier, also 56,000, 56,500 need to be taken off on a weekly closing in order to attract fresh buying interest. This ongoing broad range of 53,500 and 56,500 is very important for next couple of months in order to give a direction for the index. Till the time 53,500 and 56,500 is being saved, the index continues to be within a range and with a hedged outlook. For the day today, dips towards 55,000 and lower can be looked for buying, maintaining stop below 54,700 mark, while pullback towards 55,850, 56,000 levels can be looked for selling, keeping a stop over and above 56,200 mark. We are heading towards the monthly expiry, and as per the open interest data for 29th of May, Nifty maximum call buildup is at around 26,000 strike price followed by 25,000. And on the lower end, 24,000 and 23,000 puts has the maximum build-up. Broadly, if we analyze the complete OI data chain, then the higher strike prices have high magnitude of quantity compared to the puts that indicates upside capped. While in Bank Nifty, the maximum call build-up is at around 56,000 strike followed by 53,000 put build-up. And quantum of call writers are still heavy compared to the put writers, indicating upside capped. So both Nifty and Bank Nifty remains within a range with a slightly downside outlook unless and until the immediate hurdles are being taken off. Overall, be light with the leverage positions and be selective in the market as of now. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.